Hey, thanks for being in the REC experience. I'm your host, Jas Takhar, with your girl, Laura Elto Stewart.
Woo-woo!
With a crazy weekend in Niagara.
Ridiculous. We're running on adrenaline.
It is. Lots of coffees.
Coffee. In our new mugs, mind you.
Oh, wow. Shout out to the new mugs.
Cheers.
Salud. Shout out to Stephen Rochester, our head of digital graphics, and he obviously helps with everything that our boy Machado and the rest of the team do in the REC Media Squad, coming up with the new designs.
And
I love the yellow. They're bright.
And a big mug, and we need lots of caffeine because we're exhausted.
Or you can actually use these for beer as well. They're pretty big.
Even better.
This episode, really cool event we did, live event in London, Ontario. We brought out our boys, Sasha Cucuz from Greybrook Securities, CEO of Greybrook Securities. You guys have heard him in the past episodes, but this one was different because he really went into the healthcare side of
which I
Greybrook.
didn't know about. So we obviously had his business partner, Peter Politis, on previously, talking about the real estate side of things. Obviously, you can tell Sasha's super passionate about this. And, sometimes I go home and when you're like working with electricity or doing something, I'm like, thank God people spend their time to find solutions to the world's problems, because I would never care to do it. Like I'll say, so I wish someone would come up with X, Y, and Z, but I never think to do it. And here's somebody actively going out and coming up with amazing solutions to the world's problems, specifically in the mental health care arena.
This was like one of their first investments. It's taken years for them to put this together. Sasha tells a really crazy story. That was amazing. Yeah. How many times he needed to speak with his business partners about this. You guys got to really check that out. Justin Konikow obviously hosted us in his city of London, Ontario. We went to a bar. Funny enough,
Shout out to Toboggan,
the place that we were at. It was probably the first time I was ever in a bar at 8:30 in the morning. We were
sadly, maybe not the first time I've ever been in a bar at 8:30.
We were drinking. Breakfast, live event in front of almost 100 people. Shout out to the audience for sticking through a couple of episodes that we did there.
Oh, yeah.
And as always, right, just giving us the feedback. It's different doing it live. Like, this is cool. I love it. I love doing it in the studios.
It's good. Our studio. You get the energy from everybody, right?
Yeah, it's different. It's definitely different.
The laughter when Jas makes his corny jokes.
Right. You call them dad jokes or something? What do you call them?
They're dad jokes, for sure.
Not mine.
For sure. And you use the same ones.
That's not true.
Like, you need some new material.
How many episodes do we have now, Machado? We were at like what?
87 maybe?
87, 88 episodes. If you guys go back to every single one of them, and I bet you I haven't used the joke the second time around.
Okay. Well, somebody's going to have to go back and try and find that out.
Check that out.
Yeah.
I'm not doing it.
Machado's heard my voice and your voice enough times. The event that we were in Niagara, close to 500 investors came out to a closed VIP investor summit.
It's a little educational seminar
with Keyspire, which is Canada's largest and fastest growing investment group.
Scott McGilvery, Michael Saraceni, they're the owners.
Yeah.
They've both been on our podcast, so definitely go back and check
season
those
one,
out.
Season 2, or season 3. Season 2 and season 3, right? But the crowd there was just amazing, just a blast.
The energy and everyone's just so thirsty for knowledge and information. It's always fun.
Simos and I got to go on stage for 40 minutes, talk about what we do when it comes to due diligence, looking at properties. We also launched a very exclusive investment opportunity to the members. It pays to be part of this group,
for sure.
Because there is exclusive opportunities.
Okay, I'll give you one compliment.
Cool.
One time.
Yeah.
You guys did a great job.
Thank you.
That's it.
That's all. With your help, I mean, yourself and Tyler, just being there was. It's nice to know that you got the team around you that can just take care of stuff. Like even setting up for the event, loading up, packing, loading up the car, making sure all of our collateral is
our
right.
long checklist of things to do the week beforehand.
Right.
So,
and now it's going to be a crazy. We're in it already in the 10-day due diligence period.
15 more days.
Or in my life, the crazy 50 years, because this is just what we do. As always, guys, leave us some feedback. If you have not subscribed yet, please do so. We know a lot of you are watching and or listening, but you haven't yet told your friends and family that this is the best podcast when it comes to real estate, entrepreneurship, and leadership. And as you guys heard me say it before, we just got nominated for Canada's Top Podcast. Woo! And so that shout out to the team and shout out to you, the listeners, because you keep on listening. We keep on talking. Thank you, and talk to you guys soon.
Enjoy the show.
REC Experience presents Real Estate, Entrepreneurship, Leadership with your host, Jas Takhar. The REC Experience podcast is now on air.
Live audience podcast, take 1.
Hey, thanks for being in the Prime REC Experience. Change it up for you.
I like it.
That?
That's awesome.
I had to make sure that the collaboration is real now. And so again, Justin, we're live at Toboggan Brewery. And so thank you again for setting this all up. You have a little bit of a backstory here as well. Like, I know our live audience has heard it, but our listeners and viewers don't know that story. So like, why did you pick this place?
So I grew up in Montreal.
Yeah.
Montreal.
I won't hold that against you.
Very,
The
very.
Canadians.
We can have
the Canadians.
We can have a separate podcast.
Fans, that's why. But go on. Yeah.
So I grew up in Montreal. Good thing about Montreal: great city, amazing food, amazing people. A little bit too much fun. So I had to find somewhere to go. My sister had come to a little town called London, Ontario, and she said, "Why don't you just come down, check it out for a little bit, and see how it is?" Much to my parents' chagrin, my dad had actually been courted by London Life and chose to go back to Montreal and live there. I came to London and really fell in love with the people and the community that was here, right? It's the biggest, smallest town you'll ever see. Everybody has a link to London one way or another and always finds their way back to London. So when I came here, first thing I did was I got a job, because that's what I always did. I always worked, right? Good start. A good friend of my sister's got me a job as a bouncer. Now, I say bouncer with an asterisk because I was about 145 pounds soaking wet. Definitely didn't know how to fight. Marty's laughing because he works with me. And really, like, I came to this building and I met a guy in the parking lot that was sweeping up cigarette butts and talked to him for about 30 minutes. And super nice guy, like, couldn't have been a nicer human being to me. Went inside and somebody said, "Do you know who that was?" And I said, "No." So that's Mike Smith. He owns everything. He owned this building. He owned the Jim Bob's. He owned the 5 other companies that he ran at the time. And the fact that he would be in the parking lot being cordial to people and just giving that customer service experience really stood out to me. So instantly, I wanted to get closer to Mike and learn kind of how he accomplished what he accomplished. Right. So the easiest way for me to do that was do every single job in the company. So my first job in London was actually here. This was the place that I was a bouncer, and anybody that knows this place from back in the day, didn't look like this. It was a very different city, very different dynamic. But I worked my way up in the company, did many different things, learned a lot from Mike. And I actually feel like they're a second family to me. So when we started talking about doing this, it was initially, hey, come to the new office. We'll hang out. We'll shoot it there. Then 20 people were going to come, and then 60 people were going to come. And I think we're at like 103 registered. So I called Ron, who was like a dad to me, and I said, "Hey, Ron, do you have room for your long lost son to host an event?" And then they ended up pulling it off last second. So I owe a huge debt of gratitude to Mike Smith and the entire company, because they've always been there for me and they've helped me through some really tough times in my life.
We're going to be doing a second episode, obviously, about certain strategies that work in London and in Toronto. And then we'll go a little bit more into the backstory and how you got into real estate, because I think our listeners and viewers and even our live audience can even hear more about that, like how and why you made the transition into real estate. But about a month ago, I had a guest on, and he was a special guest then, and he's a very special guest.
I get the very today.
You get the very today, because you made the drive to London, so we really appreciate that. I'm going to let you introduce yourself, and you tell us a little bit of your origin story, and then I really want to get into what Greybrook essentially does as well.
Yeah. I'll grab the mic. So even though I don't have a volume problem, you never know. Love London. Yeah. Haven't been back in a little while, but I actually used to live in London. Back in the 90s, so I've been here before. And the drive wasn't bad at all. And we were just talking about this on the way in, how, everything's so connected in Southern Ontario. When you talk about, and even us as we get into what we do and how we invest, like when you think about London, you think about Cambridge, you think about Kitchener, you think about Toronto, it's all very connected. And you know, I think that as population growth happens, it's not all Toronto centric. So notwithstanding the fact that we tend to invest, you know, close to home, it's really broad. But anyway, so kind of how I got into the business. So my company, for those of you who don't know, and the viewers, we started about 15 years ago. I was in the investment business before that, and I was working for an investment bank, and met my partner, now my partner, kind of in a fortuitous way. He had IPO'd a healthcare business, and it was a successful IPO. And part of that process, he made some money for himself and started to kind of invest it in different ways. And we sort of met through a mutual friend. And long story short, he said, you know, why don't you leave the bank and come work with me? I've got a day job because I'm still the CEO of this company, but I'm investing in a bunch of stuff. Maybe you can help manage that. I have one other guy that I'm thinking about hiring, and that's my other partner, Peter. So 15 years ago, it was three of us. One of them kind of not even there every day because he was running another business.
Very successful business.
A successful business, yeah. And today we have about 85 people. We manage about $15 billion worth of development. So probably the largest in the country.
It's Greybrook is essentially split into two different firms. Like I wanted to give even me an explanation of that. So if you don't mind going into that a little bit.
Yeah. So last week,
I'm confused sometimes. It's Greybrook Realty Partners and Greybrook Securities.
Yeah.
Okay.
So it's confusing for everybody. So if you ever visit our website, I actually just had a meeting last week with marketing where I'm like, I don't even know what we do when I go to our website, and I kind of feel like I should know what we do. So we're going to revamp that whole thing. But so Greybrook, there's actually three entities. There's Greybrook Capital, and that's kind of the mothership that is owned by myself and my two partners. Within that, we have Greybrook Securities and Greybrook Realty Partners, and we have a company called Greybrook Health. Because we sort of invest in two different disciplines. One is real estate, and that's kind of what we're here to talk about mainly today. But we also have a healthcare side to our business where we invest in medical devices, healthcare services, different sort of medical technologies. So Greybrook Securities is really what enables us to go out and raise capital. So raising capital is a regulated business, obviously. So Greybrook Securities is a SEC, OSC registered business. Greybrook Realty Partners is our asset manager. So they are the ones that are managing the projects on behalf of our investors. So really functionally, forget the names of the legal boxes. The way that we sort of operate internally is half of our team is responsible for working with our investors, both institutional and individual, in kind of putting together portfolios. Like we believe that, you know, we're not in the business of buying deals. Like, yeah, we market a deal, but at the end of the day, if you and I just met and today we happen to be marketing a deal for our investors in London, the first thing our team would probably say to you on the capital market side is, why don't we understand what Jas wants first? Forget the deal for a second. Let's understand your strategy. Let's understand your investment objectives.
Kind of like a high-level portfolio analysis.
Exactly.
Okay.
And then once we can establish that, I think our objective is always to create a diversified exposure to you, because when we invest, we do multiple things. We build housing communities, we build townhomes, we build condos, we build rental buildings. We're in multiple markets across North America. So you can build a diversified exposure to what we do, and that's kind of our objective towards it. So Greybrook Securities, that's kind of their job. Once we bought a deal and capitalized it with our investors, we're the general partner of that partnership, and we will then, Greybrook Realty Partners, the asset manager, will be the day-to-day manager with our developer, making sure that we're maximizing our outcome, managing our risk, things like that. So that's kind of how we're divided. So the team is about, I'd say half and half, maybe 60% capital markets, 40% asset management. But
So you're essentially allowing investors like myself and Justin and everyone here and anyone who's listening to partner up with developers.
Yeah, that's exactly right. But one thing that was important to us, because the way we got into the business, like I said, it was with our own money, or one of our partners' money, and now it's our own money. But we learned that developers are great and they always have good intentions, but the interests aren't always 100% aligned with the investor. Just the simplest example is if I'm a billionaire developer, okay, so like if I'm going to make $50 million on a project, whether it's 4 years from now or 8 years from now or 10, like who cares, right? Like, so I'll make decisions and say, okay, yeah, the market's not great. I'll just wait, or I'll do this, or I'll do that. Or, you know, I won't use any leverage because I don't want to, but maybe you need to for the return of that one project, right? And they also kind of look at multiple projects and say, okay, well, there's this one and this one and this one, and I'll launch here, but I won't launch here. Like, we needed to kind of come in and be that intermediary and say, okay, well, I get that you have 6 other things, but like, I care about this one and I need to have control over this one, and I need to be able to compel them to make the right decisions. So in our joint venture, we have decision-making capabilities over, pretty much every major area of the development. So that's why it was important to build out our asset management function. Frankly, obviously to protect our money, but almost equally importantly, to work with the biggest and best developers in the country, which we're fortunate enough to do. You have to know what you're doing. Right. And if I'm sitting across the table from you and you're mad at me, or you're, whoever, DeGasperis, and you're going to sit there and say, I'm going to give you control over all these things. Like, are you on crack? Like, why would I do that? Yeah. If you don't know what you're doing, right? But if you've proven that you have the resources and the people and the capability, then you will get that decision-making ability. And I think today our developer partners view it as a huge positive, because when we're working, currently we manage 72 developments across North America. Wow. You tend to see some things, right? Yeah. And at any given time, we're negotiating a construction loan, we're opening a sales center, we're, acquiring a piece of property, tendering costs, working with the municipal approval. So at any given time, you have real-time experience as to what's happening in the market. So many times our partners will say, hey, we're thinking of buying something here, or we're thinking of launching now. And rather than looking at a research report or like Urbanation or whatever, which they're great sources of information, but they're ex post, right? So you're getting them kind of after the fact, and they're not always 100% accurate. And that's not a slight on them. It's just that you can't possibly have that amount of information in a real-time way.
And so what do you like? What's your mindset when you're looking into investing? Like, because we can all take some of that and essentially take that home and make use of those strategies. So when you're looking into either, like, what's your due diligence like? Because myself and Simeon for years have been using your stats and your kind of crack team, so to speak, doing all the research. But I really want to take all of us, like all the listeners, inside that war room, so to speak, sure, when you're doing your due diligence on a development. Yeah,
so our team's excellent at that. So we have a couple functions. One is our acquisitions function. The second is kind of the project management function. And then the third is research, like market research that's always real time, because it helps inform your decisions. But the way, sort of from beginning to end, how we look at what we're investing in, it's very much a top-down approach, as we would call it, right? So we have kind of a macro thesis as to what's driving our decisions, like where we're buying and why, for the most part. And that goes from kind of the market and what the drivers are in the market. And, for us, for example, everywhere we invest, one of the main themes in development for us is land scarcity at a simplistic level, right? So you need to have population growth, you need to have demand drivers, but those aren't enough. Like, you need to have constraints. There's markets in the United States, like the example I give the most often, and last podcast I probably offended some people in Western Canada, so I'm not going to.
That time we were live going into Western Canada, and I don't think you knew about that. So yeah,
I think I said that it doesn't matter. I'm not going to do that today. So hopefully nobody from Atlanta's watching, because I tend to pick on Atlanta. But Atlanta is a good example where you take the Atlanta metro area and it's got 6.5 million people, kind of like the GTA. But Google mansions in Atlanta, and you can buy something kind of smack dab in the middle of Atlanta for $2.5 million. That same house in Rosedale in Toronto is like $22 million. So how do you account for that if you have the same population, you have relatively similar household income on a household basis? It's the scarcity, because the zoning environment and how difficult it is in a place like Toronto versus a place like Atlanta, where it's a lot more liberal, that makes all the difference in the world. Places like Vancouver. So everybody talks about Vancouver, it's overheated, it's this and that. yeah, maybe today, like there's always volatility in real estate. Like we take like a 20-year view to the world. And if you look at a place like Vancouver, it's one of the only places in the world other than Hong Kong that's like completely landlocked. So sure, I get that there's going to be ups and downs based on demand and sort of ebb and flow and kind of inventories. That's the other thing people don't take into account when you look at statistics and people say, well, sales have gone, this quarter they were 10,000 units and this quarter there were 4,000 units. And then the conclusion that the media comes to is, oh my God, the market's taking
Yeah, it's going down.
beep, right?
Yeah, beep.
Not so good.
You can
Post-production will take care of that after.
Yeah. You can take any set of data and skew it however you want to tell whatever narrative. Like every time the news puts out a post saying this is what the housing market's doing, we try to dissect it and actually give you the stats that you can look at that are going to tell the actual story versus what they're just trying to get. Because I think media has changed very dynamically from what it used to be, which was a news source that you would go to find out what was happening, to an entertainment source where they're being driven by advertising revenues and clicks. They're not being driven by the same premise that, I need to know what's happening because Twitter is or Facebook is. That's where you actually see, if there was an explosion in Old East Village, you probably heard about it online before you actually read about it in the news.
Yeah,
right?
like I agree.
If it bleeds,
For sure.
it leads.
Yeah,
right?
yeah.
Unfortunately.
So anyway, so you get these stats like, oh my God, sales are down. Okay, but let's talk about inventories. Let's talk about in the new construction market, for example, how many launches were there? Where were those launches? I hate average prices, right? Oh, the average price of a condo is X. Okay, well, if I launched something that quarter in, Milton, or I launched it at Bay and Bloor,
Right. Big difference.
if I launched 85% of the inventory in the core and 15% of the inventory in the periphery, of course my average price is going to be higher, right? So you have to get behind the numbers. Like it's not good enough to just look at them at a headline level. So
really quickly, like in Toronto, we say there's probably close to 200 micro markets.
oh yeah, like
At least, if not more, right?
Well, we have a site. We have two sites. So to give you guys some context, if you know Toronto, and we'll stay away from like Toronto after this, but just to highlight an example, we have one site at Yorkville and Avenue Road. So Yorkville is kind of the fancy area of Toronto. That's kind of like Park Avenue or Rodeo Drive or something, right? So we have one site that's on one side, and then like 400 meters later, we have another site that's on the other side. So at Yorkville or basically at Scollard and Yonge. So kind of 500 meters. Over here, we're at 3,000 a foot. Over here, we're at 1,200 a foot, and there's 500 meters, right? Like so. Micro markets is literally, and so to your question,
Just one side of the street is a different.
for sure. But
yeah.
so to your question of what we look at, so once we've established macro and where we want to be, then it goes down real quick to micro. And micro for us means real estate is super idiosyncratic, right? As we've just determined, like one corner is different from another, so you have to get really down into the details of the site. So one thing is obviously the metrics of the site. What are you acquiring it for? What's your potential there? And then it's also understanding the market around it. So, we spend a lot of time in our underwriting because our philosophy, I think, is if we bought it right, you're not going to get hurt, right? So you might not murder it every time and make your 20 IRR or whatever you're looking to do. But I know I'm not going to get killed. And for me, when I go to sleep at night managing, billions of dollars of people's money, that helps me, right? Because I know like, hey, listen, you might not love it when you get a 6% return and you were expecting a 20. And that doesn't happen very often. Like we performed at, we performed very well, but like I take that over like a zero. Right. So, so anyway, I mean, I think that you have to go in with that mindset. Like if you're going in, I always analogize to sports. If you're getting to the plate and every single time you're going to hit a home run and you're only thinking to hit a home run, you might hit a bunch of home runs, but your batting average is going to be terrible. Right. So it's no different in investing. Like you need to really look at the defensive way, like get on base, right? Like that's your job. And then if you hit a home run, great. And you'll hit a bunch of those. You'll hit some doubles. You'll hit some triples. You'll hit some singles, but you're not going to strike out very often.
I think the most unsuccessful investors I've ever seen are the ones that have the most opinions about investing. So, we do a lot of qualification and consultation with investors. And again, as I said early on, we're not in the business of just selling people things. We're in the business of connecting people and showing them opportunities, and they got to decide for themselves what they want to do. What we see happen quite often is Uncle Jimmy will come in at the last second and tell them the one reason not to do the deal when there's 99 reasons to do the deal, as one of our friends says. And I think what Sasha's speaking to is, looking at the whole dynamics of an investment from start to finish, playing devil's advocate and looking at your worst case scenario. And we had a conversation early on about, different markets and the I Am Legend comparison. And I kind of want you to go into that.
Yeah, sure.
Speak on Detroit and kind of what your thoughts are of that.
Yeah, happy to do that. Justin and I were talking on the way in, and one of the points of discussion was just around being contrarian and how that's hard, right? Following the herd is easy. It's safe. It usually doesn't end well, in my experience. And one of our most successful investments early on when we started was in an area of Toronto called Liberty Village, which is, at the time, it was like tumbleweeds and railroad tracks and whatever. And we spent $30 million to acquire a property kind of right in the middle. And everybody was like, are you crazy? Who the hell would want to live there? And I'm like, well, I don't think anybody wants to live anywhere until developers develop it. So this is kind of the business. So again, it was a bit of a contrarian move, and we murdered it. We made a 40% a year sort of return on our money. But this kind of leads me to the mindset, and what we were talking about is the fact that in 2008, Detroit, what we were talking about was Calgary. And we haven't invested a lot in Calgary, but one of our institutional partners has asked us to acquire with them an office building in Calgary. And, when we talk about that publicly, people are like, are you crazy? Calgary, nobody, oil, down and cyclical and whatever. And I'm like, okay. And then the last comment, we had our external sort of advisory committee be like, yeah, but all the REITs are selling offices in Calgary and, it's not good and whatever. And I'm like, okay, the price I'm buying this thing at is pretty cheap relative to what it should be. And unless Calgary is going to die, which I don't think to be the case, then I'm pretty sure over the next 20 years, this is probably a good bet ultimately. And that's not blind faith. That's just logic. Okay. So when 300,000 people are coming into Canada every year, and whether you're a conservative, a liberal, or whatever political affiliation you have, nobody's disputing the fact that immigration is very important to this country, because for us to compete at a global level with output, we're small. Texas has as many people as Canada. Florida has as many people as Canada. So on a GDP level, for us to stay competitive with the rest of the world that have behemoth populations, we have to have more people. And if you look at statistically, we're having less children. Household formation is delayed, meaning people aren't getting married in their 20s, they're getting married in their 30s, they're having kids later in life, they're having less children. So all of this to say that where are the people going to come from? It's going to come from immigration. So if you buy into that simple premise, when 300,000 people come into the country, not everybody's going to one city, right? So population is going to start being dispersed, including places like London. It's not all Toronto-centric. So just that simple logic for me is Toronto or Calgary is not going to die. They have industry. People have resilience. This isn't investment science. Sometimes to make good investments, you have to be a psychologist, a sociologist. You have to kind of understand the way the world works. And I look at it and I'm like, well, Calgary is not going to die, just like Detroit didn't die. I remember in 2008, Detroit's bankrupt. It's going to be I Am Legend, the sequel. Literally, nobody's going to live there. It's over. It's over. And I'm like, I remember at the time, I didn't have the money at the time. But I'm like, I would go buy everything in Detroit. Why? Because right now you can buy it for nothing. Yeah. Literally nothing.
$6,000 you could buy a home for or something.
Exactly. 10 grand. It was nothing. And I remember thinking, if I had the cash myself, no investor is going to buy this. So the thing we always have to deliberate internally is, if I want to do it, that's one thing, but I better have the money myself, because if I can't convince somebody else, and at the time, had I gone out in 2008 and said, here's the Greybrook Detroit fund, we're going to go buy a bunch of crap in Detroit, I'm pretty sure people would have committed me, right? So, but logically, my thinking was human beings are resilient. Detroit, if it's not auto, and it may be auto because, that people are still going to be driving in cars as far as I know. But like, people will figure it out, and the infrastructure has been established and the money's been spent. So they're not just going to say, screw Detroit and go settle somewhere else. So that was my thinking. And at the time I didn't have the cash. One of our partners did. And they came in and they bought like 10,000 homes. Wow. They bought the Pontiac Silverdome. They bought 3 office buildings and all this kind of stuff. And everybody thought they were crazy because they had made billions of dollars in a different business. And now they're like, you're going to lose your billions that you just made doing this. And now they've just like quadrupled their money, right? So for me, Calgary is no different. But the theme I think that we were talking about is how it's not easy to take that contrary view of the world. And you can't just do it on blind faith. And the example I always give of that is if I had a nickel for every investor I've ever met that said, I think that this town is eventually going to develop and I bought this farm or I bought this land or whatever. And I just like shake my head. I'm like, well, if you're not an urban planner and you don't understand municipal planning and how it all works, that's a hope and pray strategy. So you have to understand entitlements. You have to understand urban expansion. You have to understand how it works politically, legally, and all that kind of stuff. But if you buy something that's entitled and a market's depressed, as long as it's not a massive systemic factor, if you have time on your side and you acquire something in a smart way, like cheap and no debt or very little debt, then you're built to wait. And I bet 10 years later, you're going to be the smartest guy in your group.
We always say that you can't day trade real estate, right?
It's ridiculous.
You got to have that.
That's Simeon's line, right? It works.
You have to have that long-term mindset. Speaking about Toronto, and we'll go a lot further deep into it. In Toronto, you're essentially doubling your value every 10 years, right? I mean, the last decade you tripled your values, but if you hold on to it long enough and have that buy and hold mindset, you're generally going to do well.
So we put up a chart. You guys aren't going to see it because of the format of this, but like I do it every time I speak, and I show a chart of like a 20-year GTA housing sort of trend, and obviously it looks good. But when you drill down on any given time period, you'll see that there's volatility, right? Like you'll see, in 2017 prices on the low-rise side were here, and then they went down, and in the moment, people can't see the long-term trend. They panic, they're scared, they're susceptible to the media. So when the Liberal government came in 2017 and changed sort of the framework in Ontario that mostly affected the GTA, where housing had an affordability issue, you saw a lot of that, right? Yeah. You saw people like fire sailing things and whatever. And we stayed very patient because, and it was hard. Trust me, it wasn't easy because investors, as I just said, they're sort of subject to, I think, some influence from other Uncle Jimmy or, whatever. And we would put out reports and say, look, like we're not launching. So we're going to wait 6 months or 9 months or whatever. And here's why we think that Toronto will be okay inside of a year or whatever. And I got a lot of feedback from people that were like, well, that's just like a hope and pray strategy. I'm like, or we have like a ton of people that synthesize data and we understand the supply demand dynamics and we think that like this can't last. It's just logic. It is logic. There's 150,000 people.
Every single year.
Every year. And if I want to forget building a condo or a massive development, if I want to like renovate my landscaping, I need to spend a year with the city getting a permit to cut down a tree, and 3 neighbors are arguing with me and whatever, right? So like try putting a condo in the middle of downtown Toronto. It's going to take you 2.5 years just to get to the point of getting a permit. And when you take supply and constrain it to that level, and everybody's missing the mark, right? I had a meeting yesterday with the Conservative government, and notwithstanding what people might think of the Conservative government, they understand the need for supply, housing supply. And up until they got to town, everybody missed the mark. Everybody was talking about land supply. Like every time I opened the newspaper, I heard like, well, the green belt, is it going to be bigger or smaller? I'm like, who cares? The green belt, bigger or smaller, is irrelevant. What's the problem is that from the time I file an application, having to fight anybody and everybody, every NIMBY in the world, every counselor who hates, the provincial government's stance on planning and, whatever. It takes me 3 years. So when you have 150,000 new people a year and you can't build anything virtually ever, and if you want 20 stories, they're going to give you 10. And if you it should be the opposite to alleviate the problem, but it's not. So just logic will tell you that notwithstanding you might have a shock to the system that's either political or an interest rate or whatever, you have a systemic fundamental problem that's just straight up economics 101. And unless you fix that problem, you will have upward pressure on pricing, period, full stop. So our philosophy is when you buy it, you need to buy it and put yourself in a defensive enough posture that if you get caught in one of those periods where people panic and, oh my God, then you wait. You just wait. And sure enough, 2017, the world fell apart, at least in the low-rise segment in Toronto. Nobody bought anything. Prices went down and whatever. And we didn't launch. I got yelled at every day by investors being like, oh my God, am I going to lose my... Just be patient. And then sure enough, we opened a sales center in Durham last weekend. We launched 50 homes. We sold 50 homes in 2 days. You couldn't have sold 50 homes over the last 2 years in Oshawa. But that's what happens. Markets cycle, and if you have a good fundamental demand, you're going to be... You'll be okay.
Even in 2017, what we saw was a little hike in interest rates, which is interesting because what happens is that tenants they can't afford they can't afford to go buy a home, and so we actually saw a lot of pressure on rents. They actually went upwards, and as investors, that's what we want to see. And vacancy rates in and around the Greater Toronto area, if you Google it, you'll see 1.2, 1.3%. I actually think it's a negative number because we see multiple offers on rentals every single day.
Well, you just hit the nail on the head. If you buy into the fundamental premise, and this is why I emphasize macroeconomics so much, because people get so caught up in the weeds of the investment, they're not looking at the bigger picture. Yeah. So what you just described is, people need a place to live. And if the economic circumstances are such that I can't buy it and own it, I still have to live somewhere. So that's where I go to the rental market. So if you have markets that have those fundamentals, you're gonna probably be able to figure it out. And that's our whole investment philosophy. And I know that, I'm not trying to undermine how much work and analysis we do. And half the people that work for me, went to Harvard and they're the smartest people on the planet. But I'm a simple person. And my job, as I see it, is the macro strategy and here's what we're doing and why, because it's logical. And then, let's buy the right site at the right price with the right structure and all those things.
Justin and I talk about all the time, even in business. Sometimes common sense is just common sense. Even just in the sales business, service business, and investing in that sense is not that different. Sasha, I want you to speak about the healthcare segment of Greybrook. I myself know a lot about the real estate side. A lot of our viewers and listeners know about the real estate side, but not a lot of people know about the healthcare stuff. You guys are up to some really cool, exciting stuff. I'm not sure how much you're allowed to share, but I would love for you to go into that further.
Yeah, absolutely. It's a part of the business that I'm proud of. Yeah. So I personally ran our healthcare group from 2012 to 2015, probably, right? So only 3 years. But the reason was we got really, really busy because we started to look the real estate side was humming, and we hired a lot of smart people, and it didn't need me as much. Not because my partner will say it's because I'm useless and never needs me.
Well, shout out to your partner, Peter Politis. He just had a baby.
He did.
If we could just give him all a round of applause because we know he's at home watching and listening. And shout out to Peter Politis. We love you, my man.
And if he didn't just have a baby, maybe he would be talking and then you guys would be bored. So there's that. So yeah. Hopefully you heard that. So Peter kind of took the reins of the real estate business on his own, and again we had a lot of people there, and because we were getting really busy on the healthcare side. So what we do there is we don't have a lot of investor capital that we manage because, as we were talking about kind of by the door, because Jas asked me, well, why are those opportunities not made available to your investors? And right or wrong, it's because on the real estate side, I feel comfortable that if you put your money in something we buy, you're not going to lose your money. Like you're going to be in a good spot. On the healthcare side, it's a lot riskier because we're investing in early stage healthcare, right? Early stage medical devices, early stage healthcare services, things like that. But really, that business for us stems from the fact that our other partner, Elias, was a healthcare guy. So that was kind of the genesis of Greybrook, and we got away from that because with the money we started with, we multiplied it in real estate, and we just kind of kept going down that path. But we always had a foot into the healthcare side of the world because we would see deals that we wanted to participate in, and that's where we just used our capital and put it to work. So right now we invest in a couple different things. One is the medical device space, ophthalmics, mental health, different areas like that, as well on the healthcare services side. So one of the things we've recently done is we started a company in 2011 called Greybrook. You can see we're very original. You know what's actually funny? The company was, I'll digress for a minute. The company was called TMS NeuroHealth, and I'll explain what it is. And then like 6 years in, it's got 300 employees and all this kind of stuff. So we decided to rebrand it because TMS is an acronym for something and you can't copyright it. So we run this whole process across the company. We hire consultants and all this kind of stuff. And they land on Greybrook. And I was like, so to me, it's so weird. Like, so when you go down to the U.S., it's a U.S.-based company, and you go visit people, and they're like, oh, yeah, it's great. I love our name. It's, Greybrook. Because they don't even know who Greybrook is. Yeah. But for somebody who's lived with Greybrook their whole life, I'm like, we just swap a different color in front of Brook. Like that's what we came up with. We spent like $25,000 for that. So the company's called Greybrook TMS. TMS is a acronym for transcranial magnetic stimulation. So transcranial magnetic stimulation is a therapy that is used to treat different types of mental health, mainly depression. And it's a non-drug magnetic-based therapy. So it almost looks like a dental chair kind of thing. You sit in it, and it applies a magnetic stimulus that's designed to sort of fire the neurons in a non-pharmacological way. So it's an FDA...
So no drugs?
No drugs, okay. No. It's completely benign. There's no side effects. It's not... for those of you who know about mental health, drugs are kind of the main way to treat. People are... A, they're not always effective. B, there's intolerances to them, right? Like you have other side effects. And then before TMS came to the world, there was kind of electroconvulsive therapy, which is shock therapy. And while it's effective, it is also very dramatic, and it's there's a lot of side effects associated with it. There's impairment of cognitive function. There's a whole bunch of different things. So where TMS fits is it takes the mechanism of a shock therapy, but rather than using an electric current, it uses a magnet, and the magnet is a much more benign stimulus. Like you can't feel it, but it's equally effective. The thinking, obviously, and the science behind it is, in my simple mind, is you take electroconvulsive or shock therapy is like taking a sledgehammer to kill a fly. Well, you can also use a fly swatter.
Right.
And in the case of your brain, neurons are all interconnected. So whether I hammer the neuron or whether I touch the neuron, I'm still delivering stimulus. So it's a scientifically proven, FDA approved, Health Canada approved machine. We currently operate 140 centers across the United States. We're the largest in the world. Wow. And it started literally from our office. Like literally, I flew down to DC. I signed a lease. We hired 2 people. I conned a doctor into becoming our medical director. Like at the time, it was like, this is gonna be the biggest thing. You're gonna make millions of dollars, and then I'd be like, oh, maybe. Like anyway, no, not quite that. But we're fortunate because our medical director is a guy named Dr. Jeffrey Grammer, who is the head of the U.S. Department of Defense psychiatry department. So he was their chief psychiatrist while he was in active service, and we actually convinced or got permission from the U.S. Department of Defense at the time to have Dr. Grammer be our medical director for a maximum allowable time of 16 hours a week because he was still in active service with the U.S. military. And he toured in Afghanistan and Iraq and like all these places, and he treated a lot of the veterans, and he was a big believer in TMS. So he had done more TMS treatments than any doctor in the world. So he was incredibly passionate about it. So long story short, we started the company. It started with literally 4 people in Washington, D.C. We invested about $13.5 million US.
Back in
2011.
Okay.
I got a lot of flack for that. Actually, my partners who weren't connected to it, Peter and Elias, weren't spending a lot of time on it. It was kind of my thing. And I remember it wasn't $13.5 million at once.
Right.
My first pitch was I think we need $750,000. And with $750,000, I'm pretty sure that we can build this, and then they'll start making money, and then we'll just invest more of our own money that the company's making. And I was wrong 11 times. But I kept saying to them, and this was my line, I'm like, somebody is gonna make $1 gazillion doing this, and you're gonna be pissed if it's not us for the sake of another $750,000. so it finally got, whatever, and there was a key catalyst for that, and I knew it was coming, I just didn't know when. It's an expensive procedure, so it needed insurance coverage, and across the United States, not until 2015 did we get widespread insurance coverage. So now it's universally covered by every insurer, and that's when we stopped spending our money. We went public. We've raised about $80 million of public capital since then, and kind of off to the races. And I'm no longer operationally involved. We had to bring smarter people to be able to build it from the idea, whatever. But I'm on the board, and it's going really well.
Congratulations on the IPO.
Thank you. Yeah.
Jazz, I want to unpack that for 1 second. There's 2 or 3 things I caught there that I want you guys to pay very close attention to. One is every single time that somebody told him, "Are you crazy?" it ended up working out.
Happens every day.
Yeah, it's wonderful. I'm going to stay close to you. I'm going to be listening for somebody to say that.
Every day.
But we see it the principles of economics and macroeconomics work in every single market, right? We see it on the commercial real estate side. Jamie's here. We call it the London Shuffle, because you'll see, in 5-year increments, tenants will go to different locations based on what they're paying for rent, because they have a P&L and they run a business. And if my buddy wants to open up a shop and he knows that he's putting his own hard-earned money, maybe he's taking equity out of his home to do it, he's going to go into an area that might not be the greatest area. But the first movers that go into the areas that create a culture or a vibe end up creating an area that everybody wants to go to, because the really cool restaurants are not necessarily in the nicest neighborhoods. But then the kids start going, and the parents hear, "Oh, my kid went to this restaurant, I hear it's the place to go." Then the parents start going, and then it's considered safe, and that's when everything kind of floods that market. I think, and you can correct me if I'm wrong, from an optics perspective, I really like the fact that you were very honest saying, I don't believe necessarily that this is 100% enough to open up to public investors that I'm going to be putting their money into it. But Liberty Village was probably the same thing for you guys back in the day, where you're like, this is risky. And can you speak to that a little bit?
Yeah, it was super risky. So I guess maybe I've evolved as a manager and an executive. I mean, at that time, a lot of the money was our family and friends, and they just took a leap of faith. Really, we put a bunch of our own money in. Probably about $10 million was ours, and then the next ring out was our immediate network of people. And Elias's network at that time was a very good. They had made money with him in the past. They trusted him and that kind of thing, and so they took a leap of faith. And then our developer partner, Plaza Corp at the time, had done a lot of great things across the city. They brought a bunch of people to the deal that trusted them. So at that point in time, it took a leap of faith. But you're right, it was a very, very risky endeavor at the time. In Toronto today, and I'll speak to Toronto, but it's the same for London. It's the same for everywhere, frankly. You described it exactly the way it operates, right? People tend to move where they can afford to live, and then that brings sort of a lifestyle there, and you start getting a restaurant. Everything you described is the way that neighborhoods evolve, and then they become cool. Yep. Look at New York City. Today, one of the hottest places to live is Harlem and Brooklyn and Dumbo. Yeah. And 15 years ago, you were afraid to walk through those neighborhoods, right? So that's kind of what happens with gentrification. And I think it's the job of urban planners, and this is where sort of planning becomes very important to cities. It's the philosophy behind planning. So I can speak to, Toronto. We've done a pretty good job, notwithstanding the fact that it's hard to get things approved and it's a challenging environment. From a planning perspective, I think we've done it right in terms of the concept of 24/7 communities, live, work, play. That's really where the world needs to go. Because if you think about, how many people have driven through the US, and the thing you always talk about when you're a Canadian in the US is like the inner city. Nobody wants to go to the inner city. Well, urban planning in the 60s, 70s, and probably the early 80s was rooted differently, right? So it was people live in suburban areas and business happens in cities. Okay, well, what does that breed? It breeds an environment where at 5 p.m., the city's empty.
Right.
Because everybody goes to their houses in the suburbs. Well, if I was a criminal,
You're not.
yeah, I mean, I feel like one because like the lights, it almost feels like an interrogation of some sort. But like the general thinking is that, well, where am I going to go do my illicit activity in the inner city where nobody else is after 5 o'clock, right? So 24-hour communities are safer communities, as you mentioned, and I think that that's the gentrification process. So if you can get ahead of that curve, that's the way to do it. I think, it takes a leap of faith in some cases, so people trusted us. I think one thing, if I could give one piece of advice to the people sitting in this room, and please take this the right way, use the people around you. Because I have so many conversations with people and I'm like, okay, well, we're doing this project in Cambridge. And they're like, I don't know about Cambridge. And I'm like, okay, well, but we're experts. So like, due diligence us. And this is how I live my life. This isn't me being like, you should do this because I'm an expert and I know everything. Well, when I invest in equities, people should diversify into different things. So if I have money in private equity or equities and my guy says, here's your portfolio, I'm like, look, man, I don't know. Like, what do I know about equities? Buy it, sell it, keep it. I don't care. But when I picked you, it's because you know what you're doing. And I diligenced you and your track record and your expertise and your process and your people and everything else. And then I gave you my money. Please leave me alone.
Yeah.
That's how I invest my money. Yeah. And similarly, I'm not saying people shouldn't be active. I'm not saying they shouldn't be proactive. I'm not saying they shouldn't care. But you also have to acknowledge that you can't know everything about everything. And if you have a day job and you invest in real estate, but you have a day job, well, let's assume that investing in real estate is somebody's day job. And in the case of our organization, it's my day job and 85 other people's day job, and they do it all day long. So we're not saying that you have to listen to what we have to say. Yeah. Please disagree. But if you're going to do your diligence, they should be diligencing you. They should be diligencing me, and beyond me, my team, my infrastructure, my process. Yeah. Because even internally, like when it was 3 people, we had investors, some of whom are probably sitting here, that would say, oh, well, what's going on in this project? What's going on in this project? And now if I go to an event and somebody says, well, I'm in Durham too, like what's going on? And I'm like, I don't know. Yeah. Like, and they're like, oh my, what? You don't know? And I'm like, okay, well, because we built out an infrastructure. Right. I'll tell you that somebody who's probably way smarter than me knows exactly what's happening in Durham too. And if there was a problem with Durham 2, I would know about it. Yeah. So I can just de facto tell you that it's fine because nobody's put it on my radar. And part of what you have to do to scale and to grow is to be able to delegate responsibilities, surround yourself with smart people, and put processes in place that allow sort of the big terminal issues to come to light, and everything else that's day-to-day has to be managed by competent people. But you have to be able to trust and be open to that idea of smart people and using is the wrong word, but you know what I mean. Like you leveraging
your track history, like your results have been proven over such a long period of time. I want to make sure I'm very respectful of your time, Sasha. I do have one last question for you though. How does an investor actually invest with you guys? Like, is it cash, lines of credit? Is it registered funds, credit cards? Like, how does that all work?
So that's a good question. Every way is available to people. You can invest in cash in our limited partnerships if you want to take advantage of the tax benefits of that. You can use corporations, holding companies, operating companies. You can invest in your RSPs, your TFSAs, your RIFs, your RESPs, everything. how you should invest in that decision is usually on an individual level, right? Like, so meaning, you know, our guys, our capital markets team will help you sort of look at sort of your total portfolio and where the money logically should be coming from based on the individual. But of course, it's everybody's choice. So all the avenues are available, you know, and you could use us to help you determine or not. The way that people normally get in touch with us is, you know, through you guys. Like, I mean, we have salespeople per se, but like we don't do a lot of marketing or whatever. Like, we work with partners in the field that we think are smart and you know, if they have relationships, and they'll say, hey, listen, like if you're looking for something passive, and we say passive because a lot of investment in real estate takes time, right? And you know, you have tenants, you have whatever, and if you're doing a bunch of things that take your time, which are good and you should be doing them, then maybe you should have other things that you don't have to think about and don't have to worry about. And development is one of those things, because very rarely can you get actively involved in a development.
Sasha, thank you so much for joining us today.
You're welcome.
Really appreciate your time.
Thanks for having me.
A huge round of applause for Sasha. That's the conclusion of our first episode today. Again, Sasha, Justin, thank you so much. Appreciate it.
Thanks, guys.
Thank you.
This has been the REC Experience Podcast with Jas Takhar, an REC Canada production.
Hey guys, thanks so much for watching and listening. Please take a second right now to subscribe and follow us on whatever podcast platform you're watching or listening. It means the world to me. Thank you.